Good evening, this is Jack from Charging the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 22nd of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some bottom day, learn from it, transfer it to your own charts. I'm not here to shoot you trading signals. This is a video for paying subscribers at CTM The Bigger Picture.substack.com. It's published on YouTube after a delay of a week. All right, now, a couple of things to say to start off with in terms of the Iran war. The first thing is the war itself really is largely irrelevant to what we're watching here. I mean, it can expand, but it's actually not really about the war. What's really important here from an economic point of view is the disruption to the Strait of Hormuz, and in the event that expands to an even bigger disruption, which also involves the Bab el-Mandab, which is the other strait, which is potentially which has basically been semi-closed off for years because of the Houthis. That's the one that leads to the Suez Canal, and that's where an awful lot of the oil from Saudi is coming through. Now, just to illustrate this, I'm going to show you a couple of things. I know it's slightly off the usual charts, but I just want to show you what I'm seeing. All right, now this is a look at three scenarios here. The first one was the 1973 embargo, and then we had stocks peak to trough. They dropped 52%. Time to the bottom was 23 months. Recovery back to the high was 7 years. Recession was, yes, and severe. GDP impact fairly severe. Inflation peak high. All right, 1990. Now this was a short one. Because it was basically done start to finish pretty quickly. Stocks only fell 21%. Time to the bottom was just 2.5 months. Recovery to the high was 4 months. So the recession, there was a recession again, relatively mild. GDP impact reckoned minus 1.4%, and inflation peak was 6.3%. All right, so that brings us to here, and potentially we're talking about a larger disruption than both of them. We've already seen the Strait of Hormuz basically closed for the last 2 months. I've got another chart for that, actually. Hang on, have I got that one here? Okay, I haven't got that one immediately available, but trust me, there is very little traffic going through. Basically, the traffic's fallen by, oh, right, here it is. Or at least this is one of them. This is just traffic going into the Persian Gulf, but it actually gives you a pretty good view of how much traffic is down. If anything, it slightly understates it. We saw a slight recovery last week over the last 10 days or so while we've been in a ceasefire, but it hasn't been much of a recovery, and at the moment it's down to zero again. So, and in terms of the overall fragility of the market, I've got another chart to show you, which is, hang on, wait a second. Sorry, bear with me. All right, this is an interesting chart. This is showing the S&P versus consumer sentiment. Obviously, you can see these were strongly correlated up until basically COVID. Since then, they've been diverging quite a bit, partially because of the amount of inflation, costs have been going up, wages have not been going up as much, and also the rich have been getting an awful lot richer, and other people have been not getting so much richer. So you're talking about a historic disparity between prices on Wall Street and what people are feeling on Main Street. Ultimately, Main Street tends to win. So let's have a look at this here. Now, we've got potentially a much larger disruption than we have seen before, and that's actually that would be mitigated if it ended now. But the fact is, it's been going on basically for almost 2 months now, 7 weeks, and it has not eased up, and at the moment there's not much sign of it easing up. At the moment, no negotiations are in fact happening. Two sides are far apart, and I think Trump's looking for an exit route here, but he's looking to scare the Iranians into some decent concessions, so he can paint this as a win, and I suspect he's not going to get those concessions. And also another 10,000 troops were sent to the Gulf last weekend. I'm I'm skeptical about Trump actually authorizing a ground invasion. But I mean, to be honest, just continuing this embargo is basically keeping the strait closed. This is another thing to consider is that the last tanker that went through the Strait of Hormuz, because obviously a tanker goes through the Strait of Hormuz and then it goes to wherever it's going. The last tanker that went through the Strait of Hormuz arrived at its destination 2 days ago, on the 20th of April. So there was a significant delay with quite a lot of ships being on the sea. Equally, if the Strait of Hormuz was to open tomorrow, it would be 4 to 8 weeks before any of the tankers going through the strait arrived at their destinations. You can see where I'm going with this. We're going to be seeing a sizable disruption in oil prices, and we've only seen a part of it so far. And that's if it ends now. If it basically drags on for another month, 2 months, 3 months, we're talking about an oil shock, which is actually significantly larger, potentially, than the one we saw in 1973. In fact, likely significantly larger, which will cause major problems with supply chains, bump up the price of food. In terms of the helium coming through the strait, which is essential for making semiconductors, it may actually shut down a very significant proportion of semiconductor manufacturer worldwide. There could be major economic impacts, and that's what a lot of people aren't seeing here. And it's easy to watch the war and the bombings and this, that, and the other, and think that actually all that matters. But actually, none of it really does. It's all about the disruption and how long that disruption is going to last, and whether that disruption will also expand into the Bab el-Mandab Strait. These are the things that are actually really important here. And at the moment, it's closed and there's no immediate prospect of it opening. In fact, with the US continuing the blockade, there's no really, until that blockade ends, and obviously it could end any day, but we're not going to see any serious traffic through until after that. And even after that, there's probably going to be a significant risk premium. The Iranians will probably continue to have control of the strait, and will be charging significant amounts of money, not enough to really bump up the oil price by a lot, but nonetheless, it will be sand in the engine, in the gears. It's the question is it going to be a huge disruption? It's already a very large disruption. In terms of where we are now, obviously we've seen a modest retracement, and then we've recovered back to new all-time highs. But the question is, what comes next? And unless we see a big improvement in the near future, chances are we are going down again. All right, so that brings us to the markets, which are obviously at new all-time highs on SPX, on ES, NQ, and RTY, but not on YM yet. I think there's a decent chance that YM is going to make a new all-time high. Obviously, if we find out tomorrow morning that the US has put ground troops in a big way in Iran, then chances are the market's going to start dropping and oil is going to start rising, regardless of what happens. But in the event that we continue on in this sort of half world of the ceasefire, then we will see how it goes. But I think certainly structurally, I think there's a good argument for going higher. In terms of ES here, no current divergence, no particularly impressive rising support here. There's no patterns so far, and normally, if I'm not seeing any real patterns for what has the move that has just happened, chances are it's not finished. In terms of RTY, sell signals reached the possible near miss target on NQ as well, and I've signed that one off because it got back to the 70 level on the RSI. YM, no divergence there. We're seeing a bit of weakness tonight. There was a rumor that went round that actually ground troops had gone in tonight and the market dropped 50 points, but it doesn't seem that's followed through with any definite information. In terms of DAX, we're pulling back a bit, ESTX pulling back a bit, and Nikkei just holding near the highs at the moment. All right, let's have a look at the bigger picture chart on these. Okay, and SPX. Okay, SPX. In terms of the hourly sell signals, I'm not taking these too seriously. We'd had an RSI 5.1 on SPX, and that made target. Obviously, we've made a new high, and this is potentially a part of a topping pattern, which is forming. And in the event that the war is not finishing straight away, and frankly, even in the event that the war does finish straight away, then we may well find that we are. This is a topping pattern, and we're going to head down further than we did before. In terms of the 15-minute chart, I do actually have a decent looking trend line here. If it survives long, this could be the basis. This could be the support trend line for a pattern. It's obviously gone up very, very, very fast. What would normally happen is this would break, we would see a slightly larger retracement, and then we would go higher. In terms of the daily chart here, I was looking for a move back into the 70 area on the RSI or a bit lower, and we almost made it back to the 70. In the event that we get back up to a retest this high here, that could give us a halfway decent daily RSI 5 negative divergence. In terms of the Qs, only got back to about the 80 level on the RSI, but setting up a divergence at the moment. This is a possible weak RSI 5 sell signal brewing here at the moment. We've already got a weak RSI 14 sell signal fixed, and we've got a full size one brewing. The RSI 5 sell signal reached the possible near miss target. Those tend to finish pretty quickly. Again, overall, this could be a double top or a possible head and shoulders forming. On the 15-minute chart, I have no obvious trend line here, and it hasn't really pulled back yet. And as I mentioned, in terms of helium disruption, that could actually affect semiconductor manufacture and really throw a wrench into the tech market. So I'm a little surprised this is so strong, but of course they do stand to benefit a lot if the war's ended. On the other hand, we're at new all-time highs here, and to be honest, I didn't think the year was looking that great before Trump invaded Iran. All right, looking at Dire, we've got close enough to the high that I'm kind of thinking the retest of the high would be the obvious next target. Again, we're setting up some divergence. Again, it didn't quite reach the 70 level, but that's not necessarily that important. We've got an RSI 14 sell signal fixed on the hourly, and no obvious pattern formed here either. Generally speaking, that means the move isn't finished. In a really heavy news environment, well, that might get suspended. But until demonstrated otherwise, I'm assuming that we would need to go higher. In terms of IWM, I haven't really pulled back much on here, and we're not forming much divergence on in the Qs chart either, but could set up a weak RSI 5 sell signal here too. Hourly chart, we've actually got, I haven't marked it in, but we've got an RSI 14 sell signal fixed. I'm hoping this gives us a bit more of a retracement tomorrow, as that could start building some slightly more serious patterns on another move up. We've got a weak RSI 14 sell signal fixed, but that's made the possible near miss target on the 15-minute. All right, looking at DAX, we have possibly got a retest of the high coming. Nikkei has already retested the high, and this is currently a beautiful double top with actually a full RSI 5 sell signal brewing. We shall see how that goes. All right, great. Let's have a look at currencies. Let's have a look at DX. Okay, DX. I've got mixed feelings about this. I mean, I've been doing a lot of reading just to keep up on everything, and one of the big things that might affect the dollar over the next few months is if we find that. I mean, the thing is, the US has been, the reserve currency for back since since the 50s, really. I mean, and that's been based on the fact that really they were the policemen of the world to a degree, i.e. they got privileges and perks because they were kind of protecting everybody. That's no longer the case. We're already getting there's already blowback from Saudi, Qatar, questioning whether or not they should keep the US bases because they obviously aren't doing anything to protect them. And actually, really, I think they're thinking that the main reason the US has gone to war here is because of Israel, and honestly, that's probably not wrong. And that actually, this is really, really not been working for them at all. So that's an issue. Also, the other thing is, of course, in the event that relations with NATO completely break down, then US might actually be asked to leave from the bases in Europe. That I mean, the thing is, NATO really values the American contribution, but if they're not actually going to get an American contribution, then there's not much point keeping the bases, which actually, are in significant degree paid by the host countries, because they're no use to anyone really apart from the Americans in that case, who use them to project their power worldwide, which NATO isn't going to be invested in if America's not going to be a significant part of it. There's already talk that some of the European countries, particularly Spain, and at least one other was mentioned, but I can't remember which one, but are talking about asking the American bases to pack up and leave. This is a new world order to a significant degree, and in that world order, well, I'm just saying it's a privilege and not a right to have the reserve currency. If people are trading in dollars because they want to keep on the good side of the US, then obviously if the US is no longer helping with their defense or a particularly important ally militarily, then well, that may no longer be the case, and that's another thing. Iran's been talking about, basically in terms of the tolls it's been accepting, it's only been accepting in yuan, Chinese yuan, or crypto, and I think there's increasing talk after this war that if the Americans are just going it alone, then there's not much reason to just be using the dollar as the reserve currency. If that's the case, then of course that could pull a lot of investment out of the US, which is in dollars because it's convenient because everyone uses dollars. I'm not sure that's going to be the case much longer. And obviously on the bigger picture, that could send the dollar down a lot over time. We'll see how that goes, but at the moment the dollar's been going up as the war has been intensifying. It's been going up the last couple of days because obviously the talks honestly, I'm not even sure there were any real talks over the last couple of weeks, but they're not going well for whatever they're worth. It's and there's no current prospect of them having any talks outside the world, wherever Trump is living. So we'll see how that goes. But if the crisis gets worse, then this will probably go up as it did in 22, and we might see my bullish scenario play out. If that's not the case, and if people start moving away from the dollar, then that's really not going to do anything for the dollar. We could see that fall back to the area where it was in about 2008 when it got down to about the 70 area. We're currently up at slightly over 98. That's a long way to drop. On the plus side, that would make American exports much cheaper, but on the other hand, it would make imports considerably more expensive, and this whole oil thing is likely to cause significant trouble with inflation. In any case, this could make that inflation in the US worse. All right, let's have a look at the other currencies. USD, we still got a double bottom, which is seeking to break up, but at the moment we're pulling back. I'm thinking we might come back up for basically a retest of the DX low and a retest of the high on euro, but we will see how that goes. GBP USD not doing a lot, kind of looks like a bull flag though. USD JPY, as and when we next get a decent move up in the dollar, I'm wondering about a test of that target I was talking about at a retest of 162. USD CAD kind of looks like a bull flag, but getting a little oversized. Australian dollar, nice looking bigger picture, double top. And on NZ, we've got not really a lot to work with short term. Let's have a look at the bigger picture charts. Okay, looking at the US dollar. US dollar, we've got a weak RSI 5 buy signal fix on the US dollar, and that has, I'd missed that actually, but we've got a potential nice move up coming, we shall see. In terms of the daily chart, obviously, in terms of the bigger picture chart, we've got a big double bottom which is breaking up, and we've got a smaller double bottom which is breaking down. We've got a buy signal suggesting we go higher. I trust the RSI 5 buy signals considerably more than the RSI 14s, although actually the RSI 14s on this chart haven't done too bad. We've got a fail here and a fail here. They're not as reliable as they are on some charts, and they're not anything like as reliable as the ones you get on the RSI 5s. We will see how that goes from here. We've got a buy signal at the moment, going to be waiting to see if this can get back up above 100. And if we see an intense intensification in the war or widening in the war, then that may well happen fairly quickly. In terms of the euro, we've got a double top which is broken down. We've seen a big rally from there, but that doesn't mean that double top isn't going to play out. On GBP USD, we have a nice looking double top which hasn't broken down yet, and a nice rising wedge which hasn't broken down yet. This rising wedge obviously looks an awful lot like a bull flag, just as this falling wedge is a bull flag. You can see a very nice view of it on the weekly, which is slightly more up to date. But this is a beautiful bull flag, and I'm waiting to see whether this is going to deliver a retest of this high here at 114.78, which it might. And I would note that this high was made after the Russian invasion of Ukraine early in 22. And this was made over the next few months. This current crisis could give us the retest of that high. In terms of euro, obviously we've got a big and pretty nice looking bear flag. On GBP, we've got a pretty big and nice looking bear flag, and I'm thinking that these could all play out if the dollar is going to go back and retest that high. In terms of USD JPY, you can see why I want to retest of 162. That would set up a very nice looking double top. Not really seeing much above that. We've got a very nice looking rising megaphone here, and I mean we could see a move up and an overthrow maybe, but I'm not thinking that we see a hard break up from this level, although technically you could argue that this is an inverted head and shoulders. I'd be surprised if that delivered though, but maybe it's worth considering. USD CAD, we've been trading in a range for the last 11 years, and I'm thinking we might see a retest of this high here in the 1.48 area. In terms of the daily chart on USD JPY, we've still got sell signals fixed, and they haven't reached the possible near miss targets. I'd quite like to see at least some more downside to sort that out, but I am wondering if we might see a retest of the lows on US dollar, which would hopefully drag this down and at least make the RSI 5 sell signal target. In terms of USD CAD, no current divergence, not seeing an awful lot in terms of short-term patterns. In terms of Australian dollar, very nice looking double top here. And this might well deliver. No current divergence though. On the monthly though, at the retest of that high, we did get a possible RSI 5 sell signal brewing. This would be a match with a strong move up on the dollar. In terms of NZ, bigger picture triangle that's been forming since 2020. It's trying to break up from that and is pulling back a bit. Really, if we're going to see a big move up in the dollar, I'd be kind of expecting this to go down. So it may be that this is an overthrow before the triangle breaks down. We shall see. Triangles normally resolve in the direction they normally are continuation patterns. The initial trend was down, triangle. The next natural move would be down again, and that would be a match with the dollar going up. So I'm optimistic about the dollar going up, but obviously I'm aware of the counter arguments, and I'm aware of the general weakening that might be resulting in the acceptability and the popularity of the dollar from current administration policy, which mainly seems to abuse trying to seriously annoy allies. All right, let's have a look at the bonds charts. Now, looking at ZB, we had a little double bottom which broke up with a target in the 115.26 area. That has not delivered the target, and we've been failing day after day at the monthly pivot. If we see an intensification in the war, chances are this will go down. And actually, I've got another interesting chart to show you here. This is a look at what bond yields have been doing in major countries this year. Now you can see the UK has been doing the worst, with it up almost 0.7% since the 1st of March. Germany and the US up about 0.4%. Japan up over just over 0.2%, and China borrowing costs have dropped. And you can see the notes I put on this chart. Bottom line, in this Iran war crisis so far, the flight to safety destination has been Chinese government bonds. Now, that's interesting. But it's certainly not been a flight to safety to US bonds. I'm concerned that I'm preparing a post on this, but I'm concerned that might actually get a lot worse this year, particularly if inflation stops taking off in the US. And there's going to be a rise in inflation from this crisis. But the question is, how big is it going to be? And partially that's about how long is this going to take. So we shall see, but there's a major downside risk which could involve a large breakdown over the next few months in bonds. And any intensification of this crisis will weaken this further. In terms of ZN, this looks like a bear flag, which has broken down already. We may well be heading back into the lows on both ZB and ZN. All right, let's have a look at that on the bigger picture charts. And on TYX, the RSI 5 sell signal reached possible near miss target. So we saw a move down in yields, and this was a move up in bonds. And I'm thinking that may be finished. Looking at the bigger picture, obviously, I'm looking at potential inverted head and shoulder patterns on TYX and TNX. These are what I'm concerned will break up in the event. Hang on one second. Here is the IHS on TNX. This is what I'm concerned that in the event that we see a sizable break up here, let's say if we saw a sizable spike in inflation and an increased reluctance to buy US Treasuries, then we could see, I've got a pattern here, which would be looking at really a rise in yields to about 9 or 10%. That could really cause economic havoc in the US and would be a major disaster scenario. Particularly because, of course, the US debt is so high, and that is a real problem. And that's one reason the bond market is fragile. 3 years ago, I think the interest paid on, because we'd seen a period of low interest rates for years while the debt was rising, it wasn't actually costing an awful lot of money to service the debt. 2 years ago, it was costing about 300 billion, I think, for a year. That's a lot of money, but it's not the 1.2 trillion that is being paid. That has been paid in 2025. And the more than that, which is likely to be this year, because of course the debt is rising at about 4 trillion a year, 3 to 4 trillion a year, likely to be 4 trillion next year. So that's an increase of current rates, 200 billion a year in increased servicing costs. This is why Trump wants interest rates to come down, you see, and he's right. If low interest rates, it is cheaper to borrow a lot of money. But what he's not seeing is that actually the interest rate is actually set by the bond markets, not the Fed, and that it's an issue in the event that he messes around and inflation goes up, etc. Then of course it's going to make it a lot more difficult to raise inflation. Now what he wants to do is take over the Fed, and actually that's been done before. That was done in the 70s by Nixon. He put in his own guy who was obedient, and that's why inflation got up to 12%. And that's why at the top of this chart here on TNX, you can see that inflation rate, the interest rate in 1981 peaked at 16% yield on the 10-year. This is on the 10-year Treasury, while inflation was being squeezed out. That's what all of the central bankers grew up learning about, and what they do not want to see ever happen again. But in the event that he does get it captured, it could reduce the borrowing for a bit, maybe. But mainly what it would do is it would just fail to get a grip on inflation. So inflation is a serious enemy. People are underestimating it because it's been so low for so long. But this is the kind of crisis that can really set that off. All right, in terms of the daily chart on TNX, we've got a weak RSI 14 sell signal that hasn't made target yet. The RSI 5 daily sell signal made target. Those are the ones I mainly watch. So as far as I'm concerned, there's no serious signal on this at the moment. TNX, this kind of looks like a bull flag, which is starting to break up. And obviously up on here is down on bonds, because this is bond yields, they're inverse. In terms of TLT, which is corporate bonds, of course, we've got no current divergence here on the, I thought we did have, we had an RSI 5 buy signal, and that made target. So we've got, this looks like a double top here, and I think it may well be, I think it is a double top here, and it's breaking down. But the bigger picture is something different. Here on TYX, we've got a triangle, which would be likely to break up, in my view, which is basically, it's not quite a triangle. It's more of a rising wedge with triangle characteristics. It's but if you have a look at TNX, we've got, we've got a very, very nice triangle. It's a peach, and we're heading back to the resistance at the moment. This is the obvious next target. This involves bonds going down significantly more to get it. Then when it reaches target, it is likely to break up. FBX, which is the 5-year Treasury yield. This has another triangle, not quite as nice as the TNX one, but still nice. And this would tend to resolve up as well. TLT. Here I've got another triangle, and this, of course, would generally resolve down. So these are all indications that we're going to be seeing trouble in the bond markets over the next few months. Now, the question is whether that trouble turns into a crisis, which it might. And that's what I'm going to be talking about in the post I'll have out in the next of my Four Horsemen series. How much is that affected by whether the war ends or not? It may or may not be affected. Actually, this is a crisis I've been looking at in embryo for quite a while. This might be the trigger for it, but I wouldn't go so far as to say this would that the Iran war would be the reason. This is something that's been building for a while as a possibility. All right, coil. Looking at Brent crude, we got a possible 60-minute sell signal brewing. Obviously, last Friday, when peace had been declared and the deal was about to be done over the weekend, we saw this big decline on oil. All of that has been taken back. It's now back higher than it was before then. In terms of CL, the same. And you saw a little spike up when there were rumors that the invasion had happened. I mean, for all I know, a ground invasion might have happened, but I think Trump's going to be reluctant to go that far. And I'm aware that he's a bit unpredictable. I could be wrong, but nonetheless, all of that decline this was the decline from last Friday. That's all been given back and more. It wouldn't take an awful lot to see this go back over 100. Heating oil is going up again. RBOB, gasoline is going up again. Gasoline is actually making new highs, although it's the June contract. Only just rolled this into from May to June, but nonetheless, this is actually making new highs for this contract. That's not good news for people buying gas in the US. NG, i.e. natural gas, we saw a falling wedge here. I was talking about a possible rally here, and we've got a possible little IHS, not a perfect IHS, but decent enough. I'm wondering if we'll see a rally up into about the 3 area, which may be what comes next. All right, let's have a look at those on the bigger picture charts and WTech. Obviously, on the bigger picture, in the event we get serious disruption, which might actually, to be honest, this disruption might happen even if the Strait of Hormuz opened entirely tomorrow, which frankly looks pretty unlikely. But even if it did, a lot of disruption would go in. Chances are we will see higher on oil prices. This is nothing to be complacent about. And the longer it stays closed, the bigger this problem is going to be. In terms of the Brent chart, again, I'm wondering about retests of these look like bull flags setting up retests of the 2022 highs. That's 130.40.91 on Brent, and we're currently at about 100. Closed today at 101.36. All right. In terms of WTech, we closed today at 92.5, and there a retest of the 2022 high would be at 126.42. Heating oil, the target was a retest 22, and that's actually already done it. So this was a new all-time high, so we're out of targets on that. In terms of gas oil, the retest would be at a retest of the 2022 high at 412. We closed today at 334, and that was a new crisis high, I think, or at least, yeah, it was. That was a new crisis high, and that was today. Not good news for gasoline. We've still got an RSI 14 sell signal fixed, but as I said, it's the RSI 5 sell signals I mainly pay attention to. In terms of natural gas, we've seen a big move down, and we've seen a tiny rally so far. This little IHS here would just be a blip. To get us back into 2.95 or 3. I'm thinking we see that, and then we see what happens. But this is not currently being affected by the war at all. All right, let's have a look at GC and the others. Now, one strange thing about this crisis is, one, we have a strange situation where the cost of borrowing for the Chinese is going down. But the other thing is that we haven't really seen a flight to safety trade on treasuries, which didn't surprise me so much. but we haven't seen it on gold either, which actually has surprised me. And obviously, gold's gone up over the last a lot over the last year, and I think overall, I'm looking at bull flags. The next obvious thing would be to break up. I am wondering if we might retest the lows first, and we could see that. We've got a double top here, but we're just really trading sideways at the moment. The double top hasn't broken down, but on SI, we've got a decent looking flag, and it looks like that's breaking down. Palladium, not got a decent looking flag. Platinum, this is a decent looking flag, and it looks like it's breaking down. I am wondering if we're going to see some downside here. Previous bouts of downside have been caused by flare-ups in the Iran war, so we will see. We will see how it goes, but at the moment, there's no bombs being dropped in Iran. Well, not by the Americans anyway. It's and we'll see how this goes. But at the moment, this is not peace. This is a stalemate. The Strait of Hormuz is closed. Both sides are facing off and making threatening noises. Iran is making hilarious Lego movies. Trump is ranting on Truth Social. Neither of these is actually providing anything which is opening up the Strait of Hormuz, which is what economically the world really needs to happen. We shall see. But if we will the stalemate push precious metals down? Maybe. But at the moment, really, this has just been tracking sideways. In terms of copper, we've got a potential little level top which has just formed here. But I'm wondering, having retested this February high, whether we might see a move up to retest this larger high here, which was the biggest high, possibly an all-time high actually, but certainly the biggest high we'd seen in decades. That can set up a nice looking level top, and we're close enough that I'm wondering about it. We could continue higher into that. All right, let's have a look at the bigger picture charts on those. All right, gold. Gold, we've got an RSI 5 sell signal, which is fixed. And this is one reason I'm wondering about more downside here. We will see how that goes. But obviously, we've come up quite a long way. We came up from 4,100 to 4,900. So if we are going to retest the low, that's quite a long way to drop. On the bigger picture, we have a beautiful bull flag here. This is a lovely bull flag channel, one of the nicest I've seen. I'm pretty confident this is going to deliver, possibly after a low retest, a move up, which takes us back up into a retest of the all-time high. All right, looking at silver, we've got an RSI 5 sell signal fixed there too. These tend to be reliable signals, and this is one thing that has me wondering about more downside. Open RSI 5 sell signal on gold, open RSI 5 sell signal on silver. Do we have one on platinum? No. Sorry, palladium. But we do have one on platinum as well. And we've got one on GDX. Nope, that's made target. GDXJ has made target too. So, okay, we did have RSI 5 sell signals fixed on those two, and those have made target. But I am wondering about at least a pullback or a retest. These sell signals do tend to make target. And we've got 3 open ones we've got are on gold, silver, and platinum. That is a good reason to think that we might be going down for at least a pullback. We shall see. Normally, that would be in the context of an intensification of the war. All right, looking at copper, not a lot to see here. I mean, you can see this is a chart from 2002, and this is actually a chart from 1970. Yeah, you can see this is a huge all-time high. Now, obviously, this isn't adjusted for inflation, and there's been a lot of inflation over the period, but nonetheless, this is a huge new all-time high, and I'm wondering if it needs a retest. Bigger picture, I'm not too optimistic about the prospects over the next couple of years. I don't think the economy is going to do that well. In the short term, we've got a possible daily RSI 5 sell signal break. All right, great. Let's have a look at the other commodities. So looking at KC, this still looks like a bear flag, and very possibly a bear flag which is already broken down. I'm leaning towards seeing a retest of this low here, which is about slightly above 270. The SB, we're seeing a bit of a rally here. We've got a possible IHS forming here, and it could be that we're just going to hold the weekly pivot as support and continue higher. If so, this would have a target in about the 1450 area. I'll have drawn that in by the weekend. On CC, this is a perfect bear flag channel, and chances are it's going to resolve into a retest of this low here. So, but it hasn't done that yet, and it's possible we could see a little more upside. We're holding on the last move the monthly pivot well. So that's support at the moment. If we break down through that, then we're probably going to break down through flag support as well. All right, CT, seen a bit of a pullback today. Bigger picture, we've got a double top, a double bottom that's broken up, and it's likely to go higher. Lumber, wondering about a resumption of the downtrend. If so, the first sign would be a retest of this low here in the 560 area. Looking at ZW, I am wondering about a breakup here, but we're not seeing that breakup here. But I think there was a lag between the rise in fertilizer prices and the and when that fed through into food prices of a few months in 2022. And I'm thinking we're probably looking at the same here. So I posted that, I did that post at the end of last week talking about this, and I am leaning towards seeing these go up. But we haven't actually seen that break up so far on wheat or corn, which is still thinking about it. Or on soy, which is forming, I think, a inverted head and shoulders, right shoulder on the bigger picture. On ZL, we have gone higher. That's not altogether surprising. Pulling back a bit on a weak 60-minute sell signal. Live cattle, I think we've been pulling back here. We've got a bit of positive divergence. I'm wondering if this is just a bull flag, and we'll retest this high and probably go higher. Lean hogs, we've been seeing a bit of a rally, which is good because we've been flirting with 61.8% retracement after the last move up. And this is getting a little big for a bull flag. So if this is going to be a bull flag and take us back up to the highs, I'd really like to see it start moving to the upside now. It may be that's already started, or we might be coming back for a retest this low and set up a double bottom. We shall see. All right, let's have a look at those on the bigger picture charts. Okay, coffee. Coffee, we've got an RSI 5 buy signal, which is fixed. We're seeing a bit of a little level bottom here, and so I'm expecting a modest rally, but I'd be surprised to see it get much over the daily middle band, which is currently at 295. Looking at sugar. Sugar on the bigger picture, obviously I've still got this target down here at 9, which I mention regularly because it's worth bearing these things in mind. Weekly chart, we've got an RSI 14 buy signal fixed. On the daily chart, we've got an RSI 5 buy signal fixed. We're seeing a bit of a rally here. We've got a potential little level bottom, and I'm wondering about this delivering a bit more, maybe getting up into the 1475 area. After that, I'm wondering whether the downtrend will resume. But we will see. All right, looking at cocoa. Cocoa, we went up to some wild prices in by historical standards, and we've actually got back down into the top of its historical stamping grounds. So we're seeing a bit of a rally here. No current divergence on the monthly chart. On the daily chart, we've got a weak RSI 5 buy signal that's fixed, which hasn't reached possible near miss target yet, but we're forming a pretty clear bear flag, and if we don't see another move up within that bear flag, then we may well just head to the lows without this buy signal reaching target. It's only an RSI 14 buy signal, not an RSI 5. We did have an RSI 5 one back at the beginning of this move, but that's long since made target. All right, looking at cotton, the double bottom here has broken up. That's got a target in the 90 area, and I think it's going to make the target. All of these, urea is what we have been. Wait a second. All right. This is the urea price spike in 22. This is actually, it had already been going up a while before Russia invaded Ukraine. That was this spike here. Went up to new highs there, but the grain prices made a high a few months later. Now, and after that, no one was really worried about the Ukraine situation anymore. This situation is more serious and may well last longer. But here you can see the urea price heading up. It was already heading up a bit before the invasion. It's now headed up a lot. It may well go very considerably higher, and it may affect food prices a lot. All of these, cotton, the ones I was talking about in the post, cotton, wheat, corn, and soy, use large amounts of urea. And so these are the ones I've been particularly looking at. In terms of wheat, if this breaks up from the double bottom, this would have a target in about the 739 to 742 area. In terms of corn, if it breaks up over 504.50, that would look for a target in the 624 to 640.5 range. These are decent moves, and actually, I mean, this doesn't get us. This gets us up to slightly less than the 61.8 retracement of the move down from the 2022 high on wheat. that wouldn't even reach 38.2% retracement. So these are things I was talking last year and saying that we might actually find these were kind of some of the biggest bull moves this year. I didn't really have a good reason for that then, but we do now. So sometimes these things only become clear with time. In terms of the soybean on the weekly chart, break up over 1235 would look for a target in the 1560 area. That would be considerably more, but still nowhere near the 2022 high. These are all reasonable moves from a historical basis after a sustained downtrend, which forms the kind of pattern which I see in a completed move. All right, great. Let's move on to crypto. So let's have a quick look at that. Now, crypto has not really changed a lot. In fact, we've been forming these bear flags forever, it seems like, but it's only actually been about 3 months. I was asked how long a bull flag could take to form before. And I pointed to a bull flag here, which I think took basically a year. It took a year to form. In fact, it was a whole bear market. Flags can take a long time. And that's just the nature of things. This one hasn't taken that long. We're up at the obvious resistances, which is at the weekly middle band on Bitcoin and at the weekly middle band on Ethereum. That's now been tested for the second time today. We've got a very decent looking bear flag here on Bitcoin. This looks like a bearish overthrow, and I'm thinking this may well be about to break down. Nice looking double top here. We shall see. But it's looking pretty decent. On Solana, I'm wondering if this is a triangle. We've not got clean trend lines for the triangle. You often don't get clean trend lines for a triangle. But at the moment, this is a bearish consolidation. I'm leaning towards this retesting the low at 67.65 when this move is finished on Bitcoin. That low is at 60.1K. On Ethereum, that low is at 1746.93. The least nice bear flag is Ethereum, but it still looks like a bearish consolidation. So that's where I'm expecting these to be, and I'm wondering whether we're at the top of that flag on Bitcoin, which is the dog, and the other two are like, a pair of tails. But Bitcoin is the big dog here. So that one is the one which tends to form the best patterns, and it's encouraging to see that it looks as though it might be near a high now. We shall see. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys again on Sunday. All right, cheers.